Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, today's date, Wednesday, April 23rd, 2014. Markets are slightly lower across the board. Right now, S&P down 3.5, Dow down 17, Nasdaq is taking a bigger hit, down 32 points on the day. Markets extremely light volume. It's now after 2 p.m. Eastern Time, and you can see up here the volume is only 42.7 million shares traded. Why is volume so light on a Wednesday? Well, there's a couple different reasons. Number one, no economic news this week so far. It's been very quiet geopolitically. Russia-Ukraine issue, no one cares about. Anything in China has been very quiet. All these factors are just making traders after the long weekend very slow to trade. Now, the other bigger factor, I think this is probably the biggest one of all, earnings up until now have been kind of mixed. You've had a good one, you've had a bad one. Kind of like Amgen was bad and Gilead Sciences was good. And they've kind of canceled each other out. And that brings you to the big names. So really this week we've had a couple decent names, but nothing earth-shattering. Today after the close, we will have Apple reporting and Facebook reporting. Those two stocks humongous for this market. Okay, so I think that's more than anything why the markets are just kind of going sideways here. What I do love is this downward move from yesterday's high and then this sideways consolidation. For me, it puts me in a slightly bearish camp for tomorrow's action. But again, if you just look at the market, very quiet market today, almost no volume, and everyone is now waiting for those Facebook earnings and those Apple earnings. Also, Qualcomm reports, although Qualcomm is not that big of a market mover, it will have some sway on technology, but really Apple and Facebook will be the big ones. All right, so that's where we stand right now, guys, waiting for that announcement. One thing to watch here, you can see these lows right here being put in. Let's see towards the end of the day if we start to break down again. You guys know over the last couple days, I've told you I've been accumulating some short positions. And again, just to give you one of them that I accumulated yesterday, I picked up on a short play at the IWM. And we bought, or I should say we shorted the IWM right here at 115 at the highs yesterday. And that was just a great one, and that's why I'm kind of showing you how beautiful the short was, because literally the high of the day yesterday was 115.02, and we got off the short at 115, as did members here at InTheMoneyStocks.com. So look at that, how beautiful a move that's been. So we're basically trading a dollar in the money already on this IWM. Now, granted, the earnings today after the bell will be a lot in terms of the direction of the IWM going forward, but even if it goes up, it doesn't matter. The market has limited upside at this point. We've been in this range all year long. People get euphoric, people get bullish again, and then the markets come back in. We've played it every single move this year and have made now over 170 net percentage points on our plays. And that's phenomenal. That's over a 17% return if you just were putting 10% in each play. Imagine if you were doing 25%, or imagine if you were doing options on these plays. You'd be up hundreds of percentage points already for the year. So in any case, that's just one of them I wanted to point out here. You can see very clearly a beautiful little double top right up here. And now the stock again, or the ETF that tracks the Russell 2000, is starting to come in beautifully. All right, a couple other things to go over here. Some different stocks in play. Let's take a look at the stocks that have earnings today. Please note how Facebook has started to pull back ahead of earnings. That's very interesting to me, because what that tells me is that it's not as guaranteed as it would have been that this stock would come in on earnings. Now, I still think it could, but it's more of a 50-50 to me. And you might say, well, I don't understand that. Well, think about it like this. If something rallies up strongly into earnings, and then earnings come out, they beat estimates, but it's kind of nothing special, well, then the stock falls very easily because it rallied so much up into earnings. Here you have Facebook actually pulling back. So even if they report a good number, it could easily just bounce back to these highs because it's already pulled back a little bit. Essentially, this is expectations. When you look at a chart, you're looking at expectations. So expectations for earnings, because the stock is falling, are being lowered slightly. And that's how you read it going into an earnings announcement, or really any sort of thing. Okay? And I'm just making a note here. I want to do a video on expectations. I think that's a great way to do a little educational video that'll go in our methodology library, where we put all our educational videos for everyone to watch whenever they want, if you're a member of the methodology library. All right, a couple other things. Let's take a look at Apple going into earnings. Apple, you can see, is also trading down about 4.5 points on the day. But I think the interesting one on Apple is going to be the daily chart. The daily chart basically shows you a beautiful triangular pattern, and I'm very curious here, very, very curious if this breaks to the upside or the downside on these earnings announcements on Apple. And look at this. So look at this triangular pattern. Notice how price is sitting equidistant from this line here and this line here. So does it not see any movement on earnings and it stays right in this range, or do we see it break to the upside or break to the downside? So I think for me personally, Apple's the more interesting play going into earnings, and I have no idea which way it'll go because it's in a triangle pattern. But just in terms of a bigger move, to me, this shows me that a bigger move could be on the horizon because of the way it's trading here in this triangular pattern if it breaks out or breaks down. All right. A couple other plays out there to keep an eye on. Twitter is pulling back. Notice how Twitter came down just shy of this double bottom right here and then got a bounce. Notice how it went right back here and now it's running into resistance. This is just classic charting, guys. It really doesn't take a genius to see these pivot tops right here equal this little area right here of resistance. Very easy to see that, and I hope everyone does see that here that's watching. All right, and again, anytime you have a breakthrough a level, and this is what we always talk about. One of the key terms we use is that former resistance will then become support. So if you break to the upside out of a resistance line and you break out, when you pull back afterwards, assuming you confirm above, that will now be support. So resistance becomes support, and then the same thing here. If you break to the downside through support, which is what this was, you can even see it bounce there off of that level, and then you broke down. Now when it comes back to this area, this is going to be resistance. And this is classic charting, guys. I mean, it's just classic, simple stuff that really, an amateur should really understand. So if you don't, make sure you start to understand it because it's stuff like this that'll help you profit in the market and really in any type of market. This market has been one of the best markets out there for trading and investing. And, if you're not profiting and maximizing, there's definitely got to be some analysis done on your part to figure out why. I mean, what's caused you to not make insane money in 2014 if you're swinging positions? I mean, go to our track record and just take a look. It's outstanding, and it shows you every single trade we've opened and closed in 2014 thus far. And when it shows you 170% net return, that's something in the first 3.5 months you got to take note of. And if you're not seeing I'm not saying you got to do that well. We're pros, but if you're not seeing, a net gain of 50% or so, there is a problem there. And you got to analyze that and figure out what you're going to do. A lot of people try to do things on their own and then ultimately it costs them more money in the long run. What I love about what we do here at the Research Center at InTheMoneyStocks.com is, one trade pays for 2 years of the service very easily, even if you have a small amount of money to invest. You just think about $50, all you need to make is $600 for a year. And that should be easily made on a 10% return on a swing trade. Many of our trades, like yesterday, I closed out the IBB. All right, we bought the IBB at 211, closed it out at 233 and change. 10%, over 10% gain. You literally have 100 shares there of that IBB, and you're making a couple $1,000s right there. Just 100 shares. So these are the types of things you got to be aware of, guys, and I hope you are. And, if you can make money, then you got to make them. All right, today JP Morgan is trading up 16 cents on the day, just a little bit here, flattish to positive. Same thing with Goldman. Both stocks have had a little bit of a push up over the last few days. Neither of them would stand out to me as being strong, though. To me, they're both mediocre at best. We've seen a lot of weakness in JP Morgan. Looking at Yahoo. Yahoo's weak again today, down 70 cents. This stock had that good pop on the the Yahoo earnings. It wasn't the earnings from Yahoo that were good, and I think that's the culprit here of why this stock's going to come back in. It was the fact that the Alibaba numbers were really good. So once Alibaba goes public and Yahoo has to sell a portion of that IPO, and they have to get rid of a portion of it. I think they'll have a lot of cash on the balance sheet, but Apple has a lot of cash on the balance sheet, and it doesn't help its price. And my fear is, well, it's not a fear because I'm not in the stock right now, but it'll probably come back in and start heading back towards like $25 to $30 a share, which is actually a pretty big drop. So if I'm actually looking for the right setup, and I will go short this play if it gives me the right setup. So I'll keep you guys posted on that. A couple other stocks out there that are intriguing today. Let's take a look at Baidu, BIDU, down in $4. Notice how Baidu went up into that 50 moving average and then came in. And that's just classic resistance again. Notice how the 50 was taken out right here. A retrace to the 50 gives you resistance. This is a classic confirmation play that I teach in my Elite Keys to Unlimited Success webinar. All right, so I think that's about it for now, guys. Let's just go back to the spiders. But remember, the essence of the day is very light volume. All right, so everyone's basically waiting for the Facebook and Apple earnings. All right, they will be out after the close today. You'll see some pretty volatile action after hours, my guess. And it really kicks the can into after hours to see where this market's going to make the next move to. Okay? So we'll see that. Again, other market moving effects, not really anything going on right now. You'll get some jobless claims tomorrow and stuff, but up until now, it's been void of action. It really has. It's been no economic news. Geopolitically, things are quiet right now, and the eyes are just all on these earnings announcements. They really are. All right, guys, have a great afternoon, great evening. I will talk to you soon. Take care.